Welcome to the Real Estate Power Play Podcast, your launch pad for skyrocketing success in real estate investing. I'm your host, Gabe Rodarty, alongside Mark Monroe. We're ready to bring you transformative stories, groundbreaking strategies, and the insider secrets of real estate giants. Get ready to accelerate your investment journey and become a true power player in the world of real estate.
Welcome to Real Estate Power Play. My name is Mark Monroe, this week's host, and I'm super excited to talk about our guest this week and the product that they have out there. If you're listening to us, please like us, comment, share us. If you're watching us on YouTube, Facebook, any of social medias, please definitely welcome to us. So this week, we're going to talk to Boris and Ryan. You guys are actually with Boris. I'm going to have you go ahead and jump in here, introduce yourself, introduce your company, and thank you guys so much for coming on to Real Estate Power Play.
Well, thank you, Mark, for having us. Really appreciate it. I'm Boris Ginovker. I'm co-founder, CEO of ResiTrade. My partner, Ryan, is also with us. He'll do his own intro. And we get here to talk about company that we started, ResiTrade, which is an index-based residential real estate platform, and the product that we're rolling out in a number of markets called Home Price Protection. A little bit background, I guess I'll start. My background prior to starting ResiTrade is all in investment management. So investing both in real estate assets, real estate securities, stock market, bond market, really 25 years of doing that prior to starting ResiTrade. And then I, saw this opportunity, and I'm sure we'll talk about how this came about. And fortunately or unfortunately for Ryan, got him involved as well, early stage. And passing on to you, Ryan. What's, for the introduction.
Thank you. That was great, Boris. So Ryan Smith, co-founder, ResiTrade. My background and experience, 25 plus years, is all in financial services. The start of my career, I actually had the pleasure of getting to know Boris. We were investment bankers, early in our career, and so from investment banking to strategy and management consulting to some entrepreneurial experience, again, all in financial services, to 10 plus years in as an operating executive in financial service companies. Yes, Boris and I partnered together 4 years ago and decided to, build this very innovative company, and excited to talk to you today, Mark, about home price protection. So thanks for having us.
My buddy Ken Close introduced us. I guess he's a real estate agent, and somehow you guys connected and told me about the product, and I'm like, wow, this is a pretty amazing product out there, and I'd never heard such of this thing. So I'm excited to kind of be a part of this and help get this out there, promoting it. And I think it's great, especially for real estate investors. So Boris, why don't you kind of dive right in and tell us a little bit about this product and how it works? And I know you mentioned it's tied to I believe the index. It's going to take a few minutes to describe it, but I'm just going to let you jump right into it.
Yeah, no, absolutely. And I'll start first a little bit about the company ResiTrade before I jump into the product. So actually, the reason why the idea of ResiTrade came about is because I personally was looking for a product just like home price protection for myself. I was looking to protect the equity in my property against price declines, and I was really surprised to find out that any kind of product like that didn't exist in the United States or anywhere in the world for that matter, and has never really been introduced. And it was just a surprise. I had absolutely no intention of doing anything about it. But the more I looked into it and the more I spent time just researching and understanding the market, the more interesting the opportunities seemed to me because of the size. I'm sure you know very well, Mark, the size of the residential real estate market, which is approaching now in the US, almost $50 trillion, right? Which is the size of the stock market capitalization. It's a huge asset class. And, the idea came about of developing index-based residential real estate platform with various products, home price protection being the first one, that reference those indices, both for real estate investors, flippers, for real estate agents, and for builders as well, right? So that's how it came about. And as a company, I think we do two things. The first thing we do is we collect the data, transactional data, and property data directly from municipalities and county offices. And we use that data, both historical and ongoing, to compile indices that measure price change in respective geographical markets, right? So for example, you can go on our site, there's going to be a ResiTrade Miami index, there's going to be a ResiTrade Phoenix index, and all of that, right? All using the same methodology and same data collection processes. And then we have an analytical platform that looks at history and also predictive modeling as well. So that's the first thing we do. And the second thing we do has to do with financial products, home price protection being the first product we're rolling out. And as the name of our product suggests, it does exactly that. It protects home buyers or investors or fix and flip operators against price declines in residential markets, right? And that's the really the point of introducing the product. That's what it does. Protects home buyers against market-based price declines. And I'll pass it to Ryan, in terms of just the details on how it works and all of that. And Ryan.
So that's interesting. So yeah, definitely, Ryan. I want to ask a question. So from what I understand, it's a insurance product or a home protection product. So if the value drops for that particular property, then the insurance kicks in. Ryan, is that from what I understand that correctly? Is that how that's working?
Yeah. So important point to make. It's not insurance. It certainly functions and sounds like insurance, but very important point. It's not insurance. The way it works is quite simple, right? We measure the home prices, as Boris just walked through, within specific geographies. And if the home values, as measured by that index, decline within a 12-month period, you essentially receive a cash payout. So it's simple. You don't have to lift a finger. There's no claims to file. No need to sell your home. You just get a payout.
Got it. I apologize. Yeah. So I thought it was insurance, but yeah, you're right. It's just a home protection product. That's really all it is.
Yeah.
And so
it's a contract.
can we kind of go through an example? Let's use some numbers. Let's kind of use a price, like say it's like, I don't know, $450,000. Like say somebody purchases it at 450. That's the current value. Why don't you kind of walk through an example, like something like that, if you don't mind?
Yeah, sure. So day one, you purchase protection, and similar to I would say, again, a close analogy with insurance or term life insurance, you pick a dollar value, right? So maybe a general rule of thumb would be on a $400,000 property, you buy $40,000 worth of downside protection. Okay. So day one, you say, I want to protect my downside by $40,000. Okay. The index value is locked in to your contract on day one. You fast forward 12 months into the future. You take a look at the 12-month index value. You compare those. Has the index dropped more than 10%? If it has, well, then you're eligible for a payout. If it drops to the maximum point of 20%, then you receive the full payout. In this case, $40,000. Let's say it dropped 15%. Well, then you get a payout of $20,000. So that's it's all index based, right? And it's all automatic. Just to reiterate, right? You don't actually have to monitor anything. You don't have to send an email to follow up with us, right? Everything's automated. It tracks the index, and you'll be provided those funds via ACH into your bank account.
Got it. Boris, I think, did you want to piggyback off of that?
I think there are a few just additions, clarifications. They're important points. One is if you're an investor, right, or a home buyer, it doesn't really matter because the product is the same. The important thing to know is that you don't need to sell your home, your property, to get a payout, right? And so what that means is, in the example that you and Ryan just used, let's say prices do decline 15%, you owe the $20,000 payout, okay? You will receive the $20,000 payout, you'll continue to own the property, and over the long period of time, let's say 10 years, even if there's a price decline in the market 15% during the short kind of period, 1 or 2 years, you'll probably make money because it's an inflationary asset, right? And over long periods of time, chances are prices will go up. What you don't know is what will happen in a shorter period of time, right? Which is exactly what the product is designed to protect against, right? And so very important to understand, you don't need to sell the property to get paid because the payouts are based off of the index, right? And the index comes out monthly, it's publicly disseminated, and there's no kind of argument as to what the index is, right? And so what I think one of the use cases potentially would be if, let's say you're an investor, right? Let's say you bought a property, prices do decline 15%, which is a sizable, in real estate, it's a sizable price drop, right? You do receive the payout of, let's say, $20,000. You can use that to potentially pay down your mortgage. There's no strings attached to that payout. You can use it for anything you want. It doesn't have to be even property related, right? You can use it for your personal whatever. But as an investor, you could use it to pay down the mortgage. Or let's say you have a disruption in rent flows, you can use that as a short-term to get you through that difficult period, right? And then continue to own the property and at the end still make money on it, right? So that just...
No, I think it's great, especially for fix and flip guys, because especially in the market, like look at what happened in 2008. A lot of the fix and flip guys got hurt really bad and they went under. And even now, I mean, we did see it in some markets 6-7 months ago when the rates started jumping back up. Certain markets, the prices actually came down. We're starting, but now it's market by market because Florida market we're still doing okay, but it's a market by market. But there were certain markets out there that dropped. Like I think Austin, Texas dropped, San Francisco dropped.
Absolutely,
I think
Seattle was down quite a bit. I mean, it's as I'm sure everybody who's listening in knows, it's a local market, which is why the indices are localized, right? But it's interesting that you mentioned and you bring up the fix and flip audience. I would say that it's probably as good of a match as far as a product goes for fix and flip operators. And if you think the way I think about it, if you're a flipper, right, you're really good and I hope really good paying the right price for the property, right? You're really good redeveloping the property, picking the location. Your time frame is usually, up to 12 months, I would say, in most scenarios. And so it's a perfect match in terms of timing. Your biggest risk that you cannot control as a fixed flip investor is what happens to that market, overall market direction during that 12-month period, right? That's something you cannot control. Everything else is within your control, effectively, right? But that risk you cannot control happens to be one of the biggest ones because you can do everything right, but if prices in Miami, you're in Miami, drop 20%, you can be the best fix and flip investor, you're probably not going to make money, right? And so home price protection effectively removes that risk from the equation. So, and the time frame is perfect, and it helps you really address the biggest risk that you cannot control as a fix and flip investor, right? Effectively.
No, that's great. The more I'm thinking about this, even like sellers, if they have a house that needs to be fix and flip, they can offer this insurance to a fix and flip investor to make it more attractive, because that's where a lot of fix and flip investors right now are currently on the sidelines, because they're very cautious, or they're really wanting a deeper discount.
Well, that's exactly.
So,
you're absolutely right. And, we started, really our main focus right now is real estate agents, real estate brokers, right? That's how we were introduced, right? And that's how real estate agents use it. Sellers basically purchase the product to move their properties for the benefit of the buyer, right? That's what happens. So you're absolutely right. Flippers could ask the sellers to provide that. There's another element to that. Let's say a flipper gets home price protection, they do whatever they need to do with the property. They can use that product and pay for it or reassign it when they turn around and sell the property, right, to the next, the permanent owner. It's basically buyer's incentive, right? And it's a great sales tool, whether you're a flipper or seller, just, through an agent.
Got it. Ryan, I'm gonna come to you in 1 second, but I want to piggyback off of this. So from what I understand, if a seller selling the home purchases the product, it gets passed down to the buyer. Am I understanding that correctly?
So the way it works is the contract is on a specific property, right? Or a piece of land, right? And so if I, buy the property and, 3 months later, I sell the property to Ryan, the contract stays with the property and Ryan is now the beneficiary. Yeah, correct.
Got it. Now, if that buyer, can they pass that down to the next seller? The next buyer,
I think, Ryan, correct me if I'm wrong. I think right now we allow one change of name, right, within the 12-month period. Is that right, Ryan?
Yeah, that's correct.
I think.
But it just, keep in mind it is a 12-month term product today. So I don't know how many times it would be transferred in 12-month period. So it works.
Okay, got it. So it's a 12-month term. So after 12 months, it renews.
Renewable.
Yes.
Yep, exactly.
It's effectively perpetual. We think of it as a perpetual coverage, but it's up to the beneficiary to whether they want to renew on an annual basis.
Okay, that makes sense. So let me ask you, I just want to have a clear understanding. So let's use an example that Ryan gave. It's a $400,000 home. And I guess if it's 12 months, so does it, when you renew it, or like say I keep the policy going and now that property is at like 500,000 or wherever that is, if the property's at 500,000 and it pulls back, is it protected at the 500 peak, or is it just protected when they purchase at the policy price, or how does that work? Does that make sense what I'm asking? Hopefully I'm clear enough.
Yeah.
Like say, you're buying that example, you're buying the property at 400,000, but it went up to 500,000.
Mm-hmm.
And then at 500,000, if it pulls back, 10%, 15% from the 500,000, is that part of it, or is it based off of the 400,000? I'm sorry.
So I think the best way to think about it is when the product renews is that it's reset at the current indicative value of the home at the time of renewal, right? So if you purchased it year one, day one, when the value of the home was 400,000, the index went up 10%, right? So now at the end of the period, the indicative value of the home is 440,000. Well, that would be the starting point for year two upon renewal.
Okay, got it. That makes sense. All right, so I kind of got that. So back to other people that would be good for this. Also, this is good for, in a sense, hard money lenders. If they're concerned about a client fix and flip, they could force they could put that part of the package. Hey, you know what? I'm okay lending the money, but I want to make sure that we have this policy in place to kind of help protect it, so that they can kind of put that onto the closing document. Is that how it's done? They put it on the closing documents as part of the closing, or is it they purchase it outside, or either or?
Either or. It's
Okay.
either or, but you're right. For hard money lenders, fix and flip lenders, yes, that's another. It's good for them because if prices decline, right? Again, their risk lending to fix and flip investors is that there's a significant market price decline, right? We know that if it's a couple of percentage points, that's probably not gonna kill the project. But if prices do decline in the area more than 10%, that's a sizable move, right? That might, inhibit the economics of that project and ability to repay. And so you're absolutely right. That's another set of players that could absolutely benefit from that.
Yeah, I see it as if I'm a fix and flip investor and I'm trying to get hard money, and a hard money gentleman's trying to beat me up and saying, hey, we're only going to go down to like 60% LTV or something like that. If I go to him and say, hey, look, I'm actually buying this home protection on top of it to cover the extra 10-20% difference in that, I think it will make the lender feel a lot more at ease.
That's exactly right. Yeah, it's a good argument for potentially being able to get a higher LTV.
Absolutely. So you can use that capital to put into the project and then put a little bit, because you're protected there, put a little bit over on the policy side of it. Because I'm sure the difference, which are, that 10-20% down difference versus buying the policy is going to be huge. So you can use that capital to put into the asset that you're trying to fix up in a sense.
Yep, exactly.
And then don't forget, you fix it and you flip it and it takes you 6 months, right? You still get to assign the contract to the home buyer, right? So again, it's a point of differentiation when you're marketing the product as well.
I think that's great. That's awesome. I also see potential like people that might have just purchased the property, like VAs, or because if they're concerned that they, I see this happen a lot of times, and we're seeing it a lot right now where veterans are buying these properties at 100% financing, and they're being redeployed to a new location, and they can't sell their home because they're upside down now. So this is a great policy to kind of help them out as well.
Yeah, I think anybody who is obviously primarily VAs, but I think anyone who has the potential or has visibility into moving to different, you're going to move in a year, you're going to move in 2 years, right? Because it's a temporary assignment. That's a perfect product, right? Because, and as you mentioned, VA is probably the biggest use case, but obviously you don't want to take the price risk, significant price declines over that period of time if you know that you're not going to be here a year or two, basically.
I know. Okay, it's a pretty simple product. I was kind of overthinking it at first, but when you guys explain it, it's really basic and it's an easy, straightforward product.
I think I think Ryan can probably talk about this, but we started with much more complex, and then we tried to really dumb it down, and I think we're almost there. Ryan, what would you say?
Well, I think we tried to dumb it down for our own purposes.
I agree. I think we were overcomplicating.
Yeah, we were overcomplicating. Definitely. Listen, I think just to add real quickly, right? I think most people, I'd go out on a limb and say, 90% of the folks are probably pretty comfortable with index-based investing, right? Or the concept of index-based investing, whether it's ETFs or index-based mutual funds. This is pretty similar, right? We are tracking an index of what is occurring in real estate prices locally, and if it declines, you get paid. I mean, it's about as simple as that.
Yep. And people that don't understand the index, it is pretty straightforward too. It's just if it drops price, certain percentage, you get a payout. It's pretty basic. So is this product located, is it nationally right now, or are you doing it by area? Like where are you guys selling this product, or not? Where's this product offered?
Yep.
So we're in the following markets today, and it's available on the website resitrade.com. You can actually go see where the product is available, input your zip code, and actually get a price quote, right? So just starting west to east, right? It's available in Seattle, Las Vegas, Phoenix, Florida market, so it's available in Miami, Tampa, St. Pete's. It's also available in North Carolina and Charlotte and Raleigh, and New York City. I always forget this
Columbus.
last one, in Columbus, Ohio. Yeah,
Columbus, Ohio.
exactly. And we're adding markets, right? So the ultimate idea is to be in the top 25 to 30 metropolitan areas in the United States. If you do so, that covers about 65% of the residential real estate value in the country, and that's a sizable coverage market.
Got it. All right, so it's good. So what's the process like? How, if somebody wanted to purchase the product, so can somebody, when you guys want to describe the process of how the whole thing is being done to purchase
Sure. You want me to do that, Boris? Or?
Yeah.
All right.
Go ahead.
So it's very simple, right? It's there's a direct to consumer model right on the website. Click buy now. You have the opportunity to go through two different flows, if you will. One, if you're buying it for somebody else, and the other, if you're just buying it for your property. I'd say it takes probably about 5 minutes or less. It's pretty simple. You basically set a dollar amount, right? That we talked about in that example. You pick your market. You enter your address. So that would be the covered property address. Input your basic, name, email, phone number, and pay for it. It's pretty self-explanatory and simple.
It really is. It's 5 steps, basic information. I'd say it takes, probably 3 to 4 minutes with a credit card to purchase product. And you can purchase coverage from $10,000, which is the minimum, all the way up to $100,000 per property, right? And if there is a need to have bigger than $100,000 coverage, we can customize that, but not, that's outside of kind of the online platform.
Oops. Okay, interesting. So like what's a price point? How does it cost? Like what's an average cost on something?
Yeah. So the price varies by geography. But in general, the easiest way to think about it is roughly 7% of the maximum payout. So if you choose the minimum amount of coverage of $10,000, it will cost you about $700. $20,000, $1,400, all the way to, right? That's how it works. And it's plus or minus 7% of the maximum payout, depending on which geography it is, right? But that's effectively how it works.
Got it. Okay. So it's pretty straightforward. And then what do they get? Like when they purchase it, they get everything just sent to an email. They get the policy right there online through all digital.
Yeah.
Correct. Yeah.
Yeah. It's all digital. You get the contract emailed to you, signed, and all of that. And yeah, it's all Adobe e-sign. There's not a need for, faxing or any of the, complicated paperwork.
Days.
Right. Exactly.
The old school days.
And just remember that the product works the same way no matter what geography it is. Out of the 12 geographies where we're currently offering the product, the only thing that changes, let's say between Miami and Charlotte, right, North Carolina, is which index the contract points to. Right? Obviously, in Charlotte, it's the Mecklenburg County radius, which is Charlotte, right? Index, whereas in Miami, it's Miami-Dade County radius index, right? But other than that, the contract is the same, the process is the same, it's straightforward.
Okay. Is there anything that I have not asked that I should have asked?
I would say that, we talked about fix and flip investors for sure. I would say that income investors in residential properties also is a very natural group of investors where it makes sense, because if you own residential property, you rent them out, right? Again, whether you are a US investor or a foreign investor from whatever, Latin America or Europe, right? Your biggest risk over a short period of time is volatility in the local markets, right? And that's not something you can really protect against unless you purchase home price protection, right? And let's say you own a property, you earn whatever cap rate, whatever income you're earning, right? Prices decline 15-20%. That's a, you know, economic hardship situation in that area. You might lose your tenant. Short term, there might be some issues paying the mortgage. So you can use the money from the payout to offset those things. And then as things cycles turn, right, you know, eventually over time, as we talked with fix and flip investors, over time it'll probably be okay. But even if you're not flipping and, you know, you basically buy to rent and own the property, that's still a very, very useful product as an investor group.
I would say, I would add one thing is for the folks watching this that are clearly actively buying properties, investment properties, fix and flip properties. If you're in a negotiation and you're not getting very much movement in terms of, you know, a discount of 10,000, 20,000, you know, 50,000, whatever it is, but you're happy with the numbers, ask for the seller to include price protection, right? It's a whole heck of a lot cheaper for them to throw in $50,000, $100,000 of price protection versus lowering the, you know, selling price or the listing price of the property. And remember, the buyer gets the advantage of having that protection, right? And then you could subsequently pass that along once you have successfully flipped and sold the property.
I think that's great. So anything else? So what we'll do is you guys are giving us a discount. So anybody that's listening to us, watching us or listening to us on your favorite podcast, there'll be a link below. So just click on a link and you guys will get a special discount if you want to go through the policy on that. So just look down below, or if you're listening to our favorite podcast, wherever you're listening to it, there will be a link there for this. So is there anything else, gentlemen, that I did not go over? Or I think this is a great product.
No, I think we covered it. I don't know if Ryan, there's anything else, but any questions, you know, ask Mark, ask us. We're online. You can find all our information. You know, this is a great product, but you know, there's an education component. We're introducing it, right? And we want as many people to ask questions.
Perfect.
Absolutely.
Okay. All right, guys.
Thanks,
all right,
Mark.
we're gonna wrap it up. Go ahead.
Thank you.
Yep. So we're going to wrap it up. Thank you guys all listening to Real Estate Power Play. Again, wherever you're listening to us, please like us, share us, comment. And if you anything that you want us to go over in any of the real estate episodes, feel free to reach out to us. Thank you all so much and take care. All right. That was good.
Excellent.
All right.
Yeah, I think we covered it. I mean, it's to be honest, there's not much more really in terms of how the product works, right?